Okay, let's just jump right in. What if the world's biggest economy had a secret plan to just poof, erase its massive mountain of debt? Today, we're going to dive into a wild $37 trillion accusation that connects the good old US dollar to the future of crypto. So the theory goes something like this. The United States is secretly getting ready to use crypto to solve its single biggest economic headache. Now, I know, that sounds like something straight out of a conspiracy form, right? But here's the thing. This accusation didn't come from some random corner of the internet. Nope, it came from inside the Kremlin. Yeah, you're looking at a direct quote from Anton Kubikov, a senior advisor to Vladimir Putin. And look, this wasn't some off-the-cuff remark. He's publicly, on the record, accusing the US of cooking up a master plan to devalue its gigantic debt and basically get the rest of the world to pay for it. Okay, before we go any further, let's just take a second to really wrap our heads around this number. $37 trillion. It's almost impossible to picture, but that is the mountain of debt we're talking about here. It's the whole reason for this accusation. So that brings us to the big question, doesn't it? Is this just a crazy conspiracy theory cooked up by a geopolitical rival to stir the pot? Or is Russia actually pulling back the curtain on a massive financial strategy that's already happening? Let's dig in and see what we can find. You know, the really wild part about all this, the scheme that Kobiakov is describing, it's not new. Not at all. It's actually a super high-tech twist on one of the oldest tricks in the government playbook, strategically making your own money and your own debt worth a whole lot less. The key idea here is something called debt devaluation. Now, this isn't about just refusing to pay what you owe. Oh no, it's way more clever than that. You pay back every single dollar you borrowed, but you do it with dollars that have been secretly weakened, so they buy way, way less than they used to. Here's a really simple way to think about it. Imagine the government borrows $100. Step one. Then, step two, it just prints another $100 out of thin air. Now the total amount of money in the system has doubled, right? So logically, prices for everything double too. And finally, step four, the government pays back that original $100. The bill looks the same, but it can only buy what $50 could before. They've essentially chopped their debt in half without anyone noticing. And look, if you think this is just some classroom theory, think again. This is a well-worn playbook. The US did this to handle the massive debt after World War II. They did it again during the high inflation of the 1970s, and they did it again after 2020. The strategy is always the same. It's just the technology that gets an upgrade. Okay, so if the trick itself is ancient, what makes this new accusation so different? One word: crypto. Crypto is the 21st century upgrade that takes this old domestic strategy and puts it on the world stage. Think about it like this. In the old days, when the US printed a bunch of money, it was Americans who felt the squeeze. You know, you saw it at the grocery store, at the gas pump. But now, with dollar-backed stablecoins, that economic pain can be exported to literally anyone on the planet holding a digital dollar. And here's how that works. See, major stablecoins like USDC are actually backed by US Treasury bonds. So every time anyone, anywhere in the world buys one of those stablecoins, they are, without even realizing it, helping to fund US debt. So when the US government decides to inflate the dollar, the value of every single one of those stablecoins held around the globe, it drops too. It basically turns inflation into a tax that the whole world pays. And you better believe the rest of the world is paying attention. It's no coincidence that central banks all over the globe are buying up gold at record rates. Why? Because gold is the classic safe haven asset. It's something you can't just print more of. It's a huge, flashing neon sign of distrust in where this whole system is headed. But listen, stablecoins are only one side of this crypto coin. The other half of the equation, well, that involves the big one, Bitcoin, and its potential new job as a national strategic reserve. And again, this isn't some fringe idea. This is a quote from Michael Saylor, the CEO of MicroStrategy, who publicly pitched this wild strategy. His argument was basically a form of economic warfare. He said the US should dump all its gold and buy Bitcoin. Why? Because it would crash the main asset held by rivals like Russia and China, while at the same time positioning the US to completely dominate the next financial era. Now, did that exact plan happen? No. But the core idea behind it is absolutely gaining steam in political circles. When you have former presidents vowing to make the US the crypto capital of the world, it shows there's a real strategic interest here. And that, well, that adds a lot of weight to what that Russian advisor was claiming. So if a huge, flashy public switch to Bitcoin is just too crazy and risky, how could this actually go down? Well, the most likely way is a lot quieter, a lot more gradual, and maybe most importantly, completely deniable. On the one hand, you have the public plan. The US government announces it's selling its gold to buy Bitcoin. That would cause absolute chaos in the markets. But then there's the backdoor plan. Just let private companies stack up all the Bitcoin first, and then later, the government just takes a piece of those companies. Much smarter, right? And here's how that backdoor plan could play out. Step 1, you let private companies like MicroStrategy become these public proxies for Bitcoin, buying up hundreds of thousands of coins. Step 2, this is crucial. It doesn't look like a government operation, so it doesn't freak everyone out. Then, down the line, if Bitcoin becomes super important strategically, the government doesn't even need to buy the coins. They can just buy a stake in those companies. It's subtle, it's slow, and you can deny it's happening right up until the moment it becomes official policy. So when you lay all the pieces out on the table, a pretty interesting picture starts to form. You've got a massive $37 trillion debt problem. You've got a long history of using inflation to solve problems like it. You've got stablecoins as a new tool to export that inflation. You've got Bitcoin emerging as a potential new strategic reserve. And finally, you've got this sneaky backdoor strategy to get a hold of it. Which leaves us with one heck of a question to think about. Are we watching a carefully crafted, deliberate plan to reset the global financial system, or is this all just a series of random accidents that are pushing us toward the very same future anyway?